You know, in the stock market, we often have these stocks that make really quick runs to the upside, but then fall back down just as quickly. Sometimes they call those pump and dumps. Well, you can make money from those stocks, but you have to know when to sell them. And this week, that's one of the things I'll show you. Plus, I'll also analyze the overall stock markets, crypto markets, some of the commodity markets. We will look at the day trade of the week on BLIN and run a market scan on Stockscores for some longer term trading opportunities. That's all coming up. So when do you sell a hot stock? We have these stocks that go up fast, they come down fast. Often as day traders, we will see those stocks that might go up from market open for an hour, hour and a half, and then by the end of the day, they're right back down again. We can also have it on the longer term time frame, those hot stocks that make astronomical gains on a lot of fluff, a lot of fake information that ultimately brings those stocks back down. So how do we make money from those? How do we know when to sell? Well, there's some simple concepts that we want to keep in mind. We want to understand what a trend line is and what a falling top is. Now, I will show you that on some charts in just a moment, but let's just go through this checklist here. We want to realize that these hot stocks are great. Don't discount pump and dumps or whatever you want to call them, because they go up a lot, and as long as you get out of them before they go down, you can do well. What we're looking for is a break of the upward trend line or a breakdown from a falling top. Now, the faster the stock moves up, the shorter the time frame that you should analyze. So let's look at a few examples here. This is a stock from this past Friday. It was a day trade, and it goes up pretty quick. Started the day right in there, around 650 or so, goes all the way up to 945. And in doing so, it breaks the upward trend line right there. So that would be your first sell signal. Now then, the next thing you want to watch for, if you didn't get out there, let's say you stick with it through this, is look for a break of the linear trend line from a falling top. So notice that this high is a little higher than this one, and there's also this one here. So that is your falling top. And then you break down from that, and that's basically telling us that the trend is over. And this stock didn't go really down a whole lot more, but it definitely didn't go up. Let's take a look at another example. Here's a stock that makes a very quick run to the upside, very fast move. And so when that line that I've drawn is broken, that's our first sell signal. Then you have the falling top. So there's a high point that is lower than the previous high point. So it went up a little bit there, makes a little mountain top, right? And when you break down from the falling top, that's another sell signal. So in this stock, you've got sell signal number 1 here when the upward trend line was broken, and sell signal number 2 there when we broke down from a falling top. Now these were day trades, but we can apply that same thinking to a longer term trade. So now we'll jump to a Stockscores chart. Here's a stock, AMC, that went from $15 to $65 in 5 or 6 days. But notice the trend. It goes parabolically higher, and then when it breaks that trend in roughly that zone, that's sell signal number 1. Then you have your falling top and your breakdown through support from a falling top right there. That was sell signal number 2, and you can see the stock has wound its way lower. All right, so let's now turn to our normal analysis of the markets. We'll take a look at the US stock markets and figure out where they are likely to go, where they've been. First chart here is the S&P 500, which to me is a proxy for those large cap stocks. And the large cap stocks have really outperformed the smaller cap lately. So stocks like Microsoft, Amazon, Google, they've done great. And the S&P or even the NASDAQ 100 are good proxies for that. So if we look at this chart, you can see that we had a nice upward trend through June into July. We broke down from a falling top, and that caused that drop lower. This past few weeks, we've had a nice move up to end or sort of in the middle of July, and now we're starting to break some upward trend lines. No falling top yet, So at this point, it looks to me like we're just heading sideways. So it's kind of a neutral to slightly positive market, but I would keep a close eye on this because it could turn into some more selling pressure if we start to break down through that floor price. Here's the long-term chart, which again, for that longer-term investor, is the chart you want to look at. For the long-term investor, great upward trend, no need to panic or be running for the exit door in general. Now, if we turn to the NASDAQ 100, this is the daily chart of the NASDAQ 100, and you can see that my upward trend line is intact. We don't have a falling top. We recently hit new highs. So even if we broke down through this, it wouldn't be terrible. If we start to break down through this level, which was the last, what I call inflection point low, that might be a bit of an issue. And if we were to build a falling top and then break down through that, that would be an issue. For now, no issues. So remain generally bullish on the NASDAQ 100. Now we turn to the Russell 2000, which is representative of not only small cap stocks, but also what that retail trader is thinking, what that retail trader is feeling emotionally. And we've had much worse performance on the IWM. Now, earlier in the year, we had great performance in these stocks, but they've cooled off. The retail trader, perhaps they've gone to the beach or the golf course, but you can see there a parabolic move to the downside into middle of July. We broke that downward trend there on July 20th. That was a positive. Now we're trying to claw our way back to the old highs. And it's trying, but it's quite volatile. Now, volatility means uncertainty. So investors maybe aren't willing to push the market lower anymore, but they're still not confident that it deserves to go higher. So what are the things on the chart that stand out? Well, we have rising bottoms, which is a sign of optimism, but we also have lots of volatility, which is a sign of uncertainty. I think the market probably bounces off of this trend line that I've just drawn here, probably bounces off of that and continues up next week. But if we were to break down through that trend line, again, from a falling top, then we should get a little bit more cautious with the shorter term trades, the day and swing trades. All right, Canadian markets. You see here the 30-day, 60-minute chart of the TSX. We've basically been sideways for the better part of a month. There was some volatility in there, but not terribly negative chart. We've got nice sideways action, building a rising bottom. If we can break through that resistance level, that would be good. If we break down through this support level here at 30.5 on the XIU, well, that would be a bit negative short term. Now, longer term, trend is up, and until that trend is broken, don't get too worried longer term. TSX Venture, which again represents that retail trader in Canada, those microcap stocks, falling tops there. We broke through some support. We're trying to bounce back. I think we probably move lower into the end of the summer on the TSX Venture. Currencies, US dollar working on bottoming. You can see the downward trend line was broken. We retested the lows a few weeks ago and held those lows. Now the question we have to watch for is, can we break out through that resistance level from a little rising bottom? If so, then I think the US dollar goes higher. That I think is the more likely outcome, but there is a possibility that we break down through support, in which case I will get negative. For now, it's kind of a neutral chart, trying to bottom there. Bitcoin, I've been kind of a bear on Bitcoin for a number of months because we broke the upward trend line from a falling top back there in April. Now this week we had a pretty good up week. The problem is we haven't broken this downward trend line yet. So at this point we're jumping back from being oversold. Now we know it's oversold because the distance between the trend line and where price was quite large. Now we're working our way back to the trend line. Once we get there, it's likely that we will get stuck and roll over and go lower. So I'm still negative. I think that we could see another week or two of upside price action on Bitcoin. We certainly had a good week this past week, and a really short-term trader could sort of trade for that bounce back, but I wouldn't get too optimistic long-term just yet. Now, Ethereum also had a little bit of strength this week, breaking this downward trend line from sort of a double bottom. I think it could get back up into here, the $28 level, but and this 28 on the ETF or the trust unit, not there yet, but that's likely where we can go on that. On commodities, Gold's been pretty sleepy the last little while, showed a little bit of life during this week, but then kind of fell back again. It's still stuck in that situation of falling tops, but it's also stable above its lows, trying to basically stabilize. I would call that a neutral chart. Oil had a little bit of a scare in the past couple of weeks with that intra-week breakdown through support. It ended up coming right back, and then this week bounced back. I still think oil can move up into this level, the old trading range from 2019. That's where I expect we're going to go. That means more likely higher than lower, but not a lot of upside. And so entering oil stocks now without a lot of upside on the commodity is perhaps not great, unless the individual stock is really showing some alpha characteristics, trading with abnormal volume. All right, the fear chart, pretty low. Fear has fallen back again. So my ratings then, bullish long term on both US and Canadian stocks, but only neutral short term. And gold neutral on both time frames, long and short term. Oil long term bullish and neutral short term. The long term trends for stocks are up. So large cap stocks, they're good holds, but the short term trading action is relatively choppy, making it very necessary to be selective about the trades you take. Now, there's been some life in crypto, and the US dollar is trying to hold those lows, reverse the long-term weakness. Gold is relatively quiet, and oil, as I said, is coming up into resistance. All right, so now we're going to take a look at the day trade of the week, an example of a stock that we would trade on Active Live. And the first criteria generally is abnormal volume and abnormal price action. We call that an action candle. Now we can look for those on any interval, 2-minute for day trading, 13-minute for swing trading, and even daily for position trading. And when we see that, we then inspect the chart pattern to see if it has a good pattern. And this week's day trade of the week is a good example of a stock making an action candle from a good pattern. That's called a pennant pattern. And we had that break just before 11 o'clock on Friday. And the stock made a really quick run, went from $6.36 up to $7.46. But this is also where we can use what we talked about at the top of the video to pick the exit point. So we had a very fast run, a hot stock, and we broke the upward trend line right about in there. So let's call it 5 or 6 times risk. If these are our risk reward elements, then we went 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 times. And if we're getting out in here, you're going to be, let's be conservative, 5 times reward for the risk we took. So for every $100 of risk, you buy 900 shares. If you want to take $1,000 of risk, you buy 9,000 shares. For that $100 risk level, you're taking a position that is about $5,700 in capital, but we can margin day trades 3-to-1. So it only requires $1,908 of capital. 5RR is $500 gain, which represented a 26% return on this very quick trade. It only lasted maybe an hour, but to make $500 for every $1,900 that you've had to put in the market, that's pretty good. 26% return for a one-day hold. More importantly, you can see that watching for that break of the upward trend line kept you out of the downdraft that the stock showed, because by the end of the day, it was almost back to where it started. All right, now we'll take a look at the Stockscores market scan in search of longer-term trading opportunities. So when I run the abnormal break scan on Stockscores, I'm looking for stocks making that action candle, but on a daily interval. So it's going to be looking for abnormal volume, abnormal price action. Then we have to inspect the charts to see if it has what we're looking for. This is all something I teach in the investor course on Stockscores. You can learn more about that in the trader training area of the website. You can see there trader training. There's lots of menus there that you can check out. All right, let's take a look at the abnormal breaks US scan, which we can select. It's one of the presets available to investor and active trader members. Run the scan, 38 stocks to look at. So my job now is to go through the charts of these 38 stocks, looking for stocks breaking from predictive chart patterns. So let's take a look at this one as a starting point. So it's making the abnormal price movement, and it's got a little bit more volume than it's had recently. But notice that the stock scores are pretty weak. They're below 50. And the reason why is this stock is coming out of a downward trend, and although it looks like it's trying to bottom, it has a lot of work to do, because all of these people that own at higher prices, they're looking just to get out of that stock at break even. What that means is, in order for this stock to move up well, it's got to trade really strong volume. And I just don't see that volume there yet. So although I think that this stock is likely stopped going down, I don't think it's one likely to move higher. Now here you have a decent chart. You can see that the downward trend line was broken. We've built some rising bottoms, but we still haven't broken through this resistance level, and I don't see that really abnormal volume there. Again, my Stockscores indicators are still below 60 on the green line, which is the sentiment stock score. It is getting better, but it still has work to do. Here's another one, below resistance. So we have a formula that I teach in the investor course that looks for certain things. And some of those things include, breaks through resistance from low price volatility with abnormal activity. So here's one that looks interesting. I can see that there is strong resistance here. So for the past 2-3 years, maybe not 3 years, 2 years, year and a half, the stock has been unable to get through that price level. That's just about $20. It hit it here, it fell lower. It hit it here, fell lower. Hit it here, stalled. Hit it here, stalled. Finally, on Friday, it broke out, and it did so with good volume. Notice that my Stockscores indicators on this stock are higher, and that's because the stock is building rising bottoms, which is a sign of optimism. So on this time frame, everything looks pretty good, but we still want to always check the 3-year time frame to get some context. So here I'm a little bit less enthusiastic. It's good because it's breaking through that resistance level and it's got good upward momentum. One of the problems though is that it's getting a little bit far above the upward trend line, and also the fact that this stock has already been moving up for over a year, and so perhaps it just has less upside potential. I like the stock. I would give this a 6.5 out of 10, which means I think it has a 65% chance of making money. All right, so that's the thought process. We use the market scan to find charts that have potential. We then check the patterns to see if it's really one of the better looking candidates. All of these stocks have potential. They all showed some abnormal price action, but the key thing is which ones have the best potential. Here's one that's pretty good. Downward trend line, build of a rising bottom, breaking from a rising bottom with pretty good volume, but not exceptional volume. But what are the issues? Well, resistance here, resistance here. So you have all these past high prices that are going to slow the upside. And so I would give that one a 6 out of 10. Not quite as good as the last one. So what I do every day is just run these market scans, looking for these longer term trades. You maybe find 20, 30 in a year. Some years you can find a lot more, depending on the market. But we're just trying to be very fussy and very patient, waiting for these good patterns to come up. Here's another one that's pretty good. You can see 3-year highs right there at $65. We ran up to 65, went sideways, and then this week broke out through that level. So that's good. I just want to go back to the daily interval just to see what the volume was like on Friday. And there it's a little bit disappointing because although the price action was quite strong, not a lot of volume behind it. Now I can see that my sentiment stock score is above 74. The fact that the signal line spiked up to 93 tells me that there was a breakout. So those are good things. There's a little bit of volatility recently. I'd give this one a 6 out of 10 as well. All right, so this is the process. We just go through charts, looking for good chart patterns, do it every day. In a week, sometimes I get 5 picks, and then I might go a month with no picks. It really depends on whether the market is in a giving mood. But by the end of the year, I'm hopeful that I can have made 30, 40 really good longer-term trades and try to beat the market. And that's really what it's all about. So that's the market scan for this week. A few good ones. MITK, probably the best, 6.5 out of 10. Hopefully you've enjoyed it. Hopefully you've learned something. And take advantage of these hot stocks. In the summer market, although it's a bit slower, there are always, every day, there's a number of stocks making really fast gains, but they often fizzle out. So use some of these selling methods that I talked about today to lock in those profits. If you've enjoyed this week's video, please tell your friends, click on the like button, subscribe to the channel. Most importantly, next week, trade well.